to another market breakdown. So I just was asked with many traders to do like a market breakdown on gold because some of them actually texted me and they like it the way I don't know. I don't know. They like it the way I did break down for them the dollar. Okay. Let's see. Okay, this is gold. So this is the yearly chart. This is every bar here is 12 fucking months. It's so long. Okay. So this shit is just going up, all right? But we had some kind of correction here. We tried it here. But now, all right, this is something interesting in the yearly. This is really interesting. Okay. If we somehow going to have a recession, we might actually come and test this bar. Okay, this is a breakout bar, but we never came back and tested it. And this is on the yearly chart, okay? This is not it's gonna take a lot of time. If we are going to have a recession, we might come to this bar and test it. The last close red bar. Okay, and it seems like this is a doji bar. It seems like we went up and we feel it like 50% of this tail. And it might happen also. I'm not like saying it's not going to happen, that we might also come and feel this 50% fail on this long tail. Okay, this is on the yearly perspective. And I'm going lower and lower and let's see what's okay. Let's go directly to the monthly. What do we have on the monthly? Okay. Mm, okay. We tried to break lower and then this is like a trading range. It's nothing really interesting here. This is a trading range. This is a trending market. This is a trending market. When you see up, down, this is a ranging market. It's not a trend. There's no real trend here. Okay, we might actually double top here, and come all the way to test this breakup point. We never tested this break. Okay, it can happen. I'm not saying it's not going to happen. This is the monthly chart. I see this as 5 minute charts. Okay, it's the same concept. This is charts pattern. There's long-term traders. There's short-term traders. The same thing happens if you go to the really 1 minute chart. Okay, but of course, on the monthly, this is gonna take years to come over there. Let's go to the weekly. Okay, the weekly is interesting. Okay, we try to double top and we try to break down, but then these lows acted as support. Yeah, we tried to come down, but this is a deviation. What you call this is a deviation. Exactly. And what we actually did, we just came back to this last close bar, tested it back, and then we are hitting higher. This is the weekly chart. All right, let's take this out. All right, this is interesting. What is happening here? Okay, we had an impulse, and then after an impulse, what we would expect, at least, okay, we try to come down at least like to the 50% level. I don't know where the Fibonacci levels. At least 50. I mean, I wish because that's what I'm gonna look to buy. So let's bring out 50. All right, this is our level. This is gonna be our first level. I'm gonna be watching that so closely. And then also this lines up perfectly with, okay, we had a high, and then this high caused this low, which makes this the last interesting point. So why it is the last interesting point? Because many traders they sell this high, limit I call them limit orders bears, and they try to sell this for a double top, like maybe to come down, but then they could trap it. So those are trapped bears with limit orders. So at some point we want them to get out as break even. So and it's not just the sell the high. That's not just the high. What I want you to actually do is all the last close bar, this green bar, That's a zone to buy. Okay. Also, that lines up perfectly with the concept of, okay, a swing high, an impulse, a pullback, maybe another impulse. Okay, this is the weekly chart. So I would watch this zone a lot to buy. Why? We had impulse, pullback, impulse, deeper pullback, but we are just coming back to this bar. So this last close bar might actually hold the price as support. All right. So I would watch for that. All right. This the daily. Okay, daily is, let's make this more precise. Okay, this is the, all right. Okay, this is my zone. I would like, but I wouldn't actually start buying here at all. I would like the price to come here, okay, and actually it can tick off from here. It can happen because we have this last close bar here on the daily. Okay, we had up, down, up, down, up, and this is the last one that went down but didn't create a new low, which makes it a potential for also some kind of support. So also these bars can actually act as support. But however, I don't really care if it's gonna tick it from here, from lower. I don't I don't really know. Okay, so what I would like to do is the same bullshit. What does it mean? Okay, this is the daily level, and yeah, this is an interesting level. Anyways, a trader I know, he started to buy here actually. So maybe if he bought the double bottom and this goes up, he's gonna happy for that. Just a trader I know. Okay. What? Okay. What makes this actually a good buy? If, only if, listen, only if maybe we come lower and then we come down and then we come back and we test this area, or maybe just lower, it doesn't matter, and then we go up. That's the start of another leg higher. But we need to take this high. This high. Why? Because this is the last high that causes this new low, and we need to break this structure first in order for us to actually consider going higher. Why? We need the all time frame to be going with the trend. All right now, it is bearish, and you don't want to be buying, except if you are really so sure about your price action, you can do aggressive entries, but you can also be more precise about your risk management. You cannot just buy here and it comes lower and they're like, oh, what the fuck I'm gonna do with my money? No, you don't do that. Like I do aggressive entries, but my risk and management is so strict. I know when to cut. I watch lower time frame. I know when I'm going to cut it. I can buy this double bottom. But I know when I'm gonna cut it. I don't really care. It can go higher and like, okay, I'm called the bottom. That feels so good. You have no idea. But this takes a lot of years to do. Like, it's not easy. It's not easy to call bottoms or tops. Really, it's not easy. I do that. I'm not gonna traders tell you like, oh, you cannot call bottoms, and I do that so precisely that your head is gonna be more. Anyways, I'm not gonna get into the subject. But a lot of bullshit traders, they're like, oh, you cannot call the button, you cannot call it. I do that. And I do it in very, very, very consistent way. And I don't care what others say. All right? I do that. I have my tools. I'm not gonna share them all, but I can do that. All right? Anyways, so if we okay, if from here we check the price higher and maybe check this high and hell it is. Check this high and we come lower and maybe test it. And also lower, it's okay. It's okay. It doesn't have to be that high. It can tick higher. Okay. If I see bullish action coming higher, that's where I'm gonna be interested in buying. All right. But right now the structure is still bearish. You should expect it to keep heading lower to this zone because this is my greatest soft, nice buy zone, right? If you look at the if you look at the weekly, this is the high. This is where the trap appears, and maybe they want to get out of the way. Maybe it's gonna come lower and then wicks higher. Okay, I don't know what's gonna happen, guys, but we can use some measures to give you just a little bit about where that can happen. Okay, okay. We had this sell. This is what we call a bar that goes higher, but then comes lower, and then it just takes off. So this is which makes this a outside bar. Okay, so this is an outside bar. An outside bar is goes higher, but then takes the highs and closes below all the other bars except this bar. But the next one, that's a flow through. Okay, that's a theta for the pairs. Okay, let's say that's the signal bar. What I sometimes do, I see, okay, there are stop order bears. These are below that bar, just one pip. No. What I like to do is to measure, okay, their stop just up there. Okay, where they're gonna be taking profit. Look, this is the one-to-one risk reward for them, and they took just the profit just here. That's why you have this kind of spikes, right? This is not random. This is very algorithmic. I don't know who created this, but this is not random. Okay, this is 2 to 2 for them, like 1 to 2. So this level for them, that actually creates a candidate for another spike up. All right. Another way to do this is to do fractions. Okay. So I'm gonna go for this. I'm gonna go to lower time, like 4 hour. Okay. Let's do some kind of fractions. This is your lovely chart of gold. Okay. So we had a high, a low, but which low was here? Like I would love to be a low to be a lower high to be here. This is so close, which makes it so weak. All right. So what I like to do is just measure the legs. So this is the first leg, and you duplicate that, and you're gonna get the second leg lower. Where is gonna take you? Exactly to our soft zone. So this is second leg down, which makes this a complex pullback on the daily. Okay, and let's do it on the middle. All right, and this is 2R for bears in the middle, and this is 50% pullback. Entire move, okay, and the really entire move. So that's the mid of the range. If this is going to develop to a range, so this is going to be the mid of the range. Okay, I would really like to buy here. That is going to make more confluences for me to take it higher. I can look for a bottom around this place. Here, I'm not really encouraged. Only if we see the price actually break this traction and start trending higher. Yeah, it can do that where the dollar is trading now. It can happen. I don't know. Who knows? Speaking of which, I I have a position. I just need to check the dollar. Okay, it's okay. I don't have to check the position. I just need to check the dollar because I have a position on here. Okay, it's not closing actually higher. Okay, it's almost the close. I want it to close higher. Nah, not yet. This is a swing trade. Okay, you are witnessing the swing trade here. Yeah, it can come down and check me out, okay? It can happen. This is trading. That's why we have a stop loss for risk management. All right, that's it, folks, and thank you for watching. And if you have any other questions, just let me know. And thanks for the traders who were supporting the other dollar breakdown. I really appreciate it. I appreciate the messages, and I appreciate what you said. Okay, that's it.